Okay, we're live. Welcome back, everybody. Another Sunday market outlook. You guys know the drill. Sunday market outlook. Purpose of this is to get ready for the week. We're going to do two things. Fundamentals, look through the news events for the week, make sure that we're ready for any of the speed bumps. And we got a pretty big week ahead of us. All right. So a bunch of stuff to watch out for. We're going to be looking. So two things. We're going to do technicals, show you guys the trades I'm watching and the levels I'm looking to take these trades from, and also fundamentals. Watch out for the news. So obviously CPI has been the biggest focus for the last year and a half. You guys know inflation is that kind of boogeyman for economists right now. We're looking for inflation to start heading back towards the Fed's 2% target, even though we talked about the average. Yeah, we talked about like the average inflation that the Fed was targeting, which means they don't have to hit 2% every year. They can average 2%. So some years they might be under, some years they might be over. And so right now, Jerome Powell's reiterated in the last testimony in front of the Senate that they're not really looking for that 2% inflation. Okay. And it's okay if they don't hit that 2% inflation number, because as long as over the next 10 years, they get the average. We're looking for no change on the annual CPI print, a little bit of an uptick in the rate of inflation growth on a month-by-month basis, and then core CPI, which excludes food and energy, because those prices fluctuate so much and there's so many different seasonality effects to those that they try to look at both numbers. But food and energy are a big part of everyone's budget, and so that's the one that I mostly I look at the headline CPI print as a more holistic view. And then also keeping in mind that CPI is also not the most accurate measure of inflation anymore. We have, PCE, which is the core measure that the Fed uses, is a little bit more accurate. It's less of a survey, more of a direct measure. And it kind of includes a lot more household goods that we ought to be paying attention to. Okay, so CPI coming out Tuesday, big news. Monday, very slow. Looks like there's nothing here. Guys, is Monday a federal holiday or something? Am I missing something here? They're probably not. All right, PPI is the producer price index. This is an early indicator to CPI, to consumer inflation. Hold on, give me. This is an early indicator to consumer inflation, because if producers are paying more to make goods, eventually they'll pass that cost on to the consumer. And then we have retail sales here. So retail sales, very obvious. If consumers are confident about their ability to spend, then that means the economy is doing well, and there shouldn't be any issues in terms of growth for the economy. The last print was down 8% or 0.8%. But now keep in mind, this is the print for January, I believe. And after the holiday season, people aren't spending as much. And so that's why we saw a bit of a downtick in retail sales. Now we're looking at the February number. They're expecting a 0.8% growth from the month over month, which means things have been picking back up in February. And if there's anything that we know about spending, is that March through June are typically the highest spend months, as spring break kind of comes in, as weather starts to get better, people are traveling a lot more. That's where we start to see retail sales start to pick back up. And then we have preliminary consumer sentiment. Retail sales to me is much more important and much more direct than consumer sentiment. And then preliminary consumer sentiment is sort of one of the earlier, because consumer sentiment is dropped in different parts. The preliminary is one of those earlier estimates. So this is an early estimate of an early indicator to what we're getting on Thursday, which is the real hard data of how much money was made in that period. So overall, pretty good week for the US economy. If we're going to talk about fundamentals, what happened last week is Jerome Powell gave some positive news to the markets, basically reiterating that the markets are in a good condition. The economy is in a pretty good state. So on that front, I think that gave some confidence. On the other hand, we also had a positive NFP print on Friday that beat expectations. So that's pretty good, showing the labor market is still strong. What else we got? I'm trying to think about what can make the stock market. The biggest focuses for me in the stock market were the earnings reports from those top 8 companies like Nvidia, like Tesla, and others. Tesla is the worst. Did you guys know this? Tesla year to date is the worst performing stock in the S&P 500. It's down almost 30%. Among that list is Paramount. I think I saw Warner Brothers was on that top 5 losers list. There was like a tech company somewhere on there. That's not good. Okay. And most of the stocks in the stock market are missing their earnings, but thankfully you have those like Nvidia and some of those top leaders who are, I don't know, overcompensating for the rest of the zombie companies in the index. So right now there are some structural signs, which is if most of the companies in the index are not doing well, and then you have the Magnificent Seven, which are those top 7 or 8 names now with Nvidia leading the charge. All it takes is one earnings miss from those tech companies to drag the market down. So the structural issues are clear. We have to wait it out and see, really just see how those earnings reports continue to come out. March is earnings season. We already have the biggest players out of the way. So for now, we're really just going to be looking at the rest of the smaller companies in the index. All right, so I did have a buy order. I had a small buy order last week at 18,121 that I was holding through the close. The market was up about 50 points or 60 points, and then ended up going right into drawdown to hit stop loss. Recovered back inside the range and created a lower high. I'm on the smaller time frames here. But you can see from the structure, created a lower high and then ended up closing back under the range. So this was the previous structural low that I was looking at here at 18,050. Market pushed up during the week, came back into clear liquidity and closed below that low. We tried to retest back in, failed to retest, and then made one more push down. So if there's anything you guys know about me is that when we miss one area of support, I'm automatically looking at the next area of support. Whoever sent, hold on, who was it? I got to give you a shout out here. Oh, Miled. Miled, if you see this later, good stuff. I got the same exact markup. Proud of you, bro. This is exactly what I'm seeing. So now that we look at the higher time frames, it makes sense that this was a weaker area of structure. Here's all-time highs. We have a beautiful, we had a double top here, triple top. We breached above and then massive closure back inside. All right. Now, I did explain something that we could have a bearish March only because we've been bullish for so many months without a significant retest. Let's go up to the daily here. We've been bullish for so long without a significant retest. You guys can see, July 2023 till October, the market was in this correction. And then since then, we've had these small periods of correction that are like maybe 1 to 2 weeks long, but nothing that's kind of been sustained. So from October of last year till today, no real correction, which is why, there's an argument that can be made that March is when we start to see a correction, and then we have a continuation to go into the rest of the year. All right, so we can look at, here's another thing to look at. This is when you can tell that momentum is starting to die out. Look at the size of the impulses as they're getting smaller, as they're getting smaller, as they're getting smaller in the wedge. You start to kind of see pressure build up like a pressure cooker. All right. And then I'm not talking about like a full retracement. We could see something as simple as, I don't know, simple, but back to like the 16,000s before we continue back up. So there's an argument to be made for a correction here. Keep that in mind. Now, until that happens, until structure gets broken, I'm going to trade this local 4-hour structure here. All right, we have this beautiful area of support. And what I've seen is, even though we did not have a closure above, we have higher lows being formed. Here's a higher low. If we look at the body, it's up here. Higher low right here. And then higher low again. Here we have highs, higher highs.
Those
And then we
customers
did
need
break
special
through. We
assistance
did
such as a wheelchair. Please remain seated until the American customers exit the aircraft as well as the bed assist you. For those customers who live in the San Juan area, welcome home.
Oh, had to mute him up. Okay. So even though we didn't have a closure above, like technically we did have a small closure, but we did have that wick above that created a higher high. So we have higher lows, higher high. Here's the previous area of structure. Thanks, Ken. Caught that real quick. And then we'll go ahead and just measure this thing. Scale down, try to get as accurate as I can with this fib. We even get down to the 5 minute, get a little bit saucy here. And the reason I'm kind of going through this in detail is because I have not done this analysis just yet. This is the first time I'm looking at the charts for the weekend, so I'm doing this live with you all. Okay. Once you set up your levels for the week, you're basically set up. You don't have to keep coming back and revisiting these. So it's good to make sure that you do it right. Whoever said we were close to the 88.6, in the last 15 minutes, we done bounced off. So what I'm going to do is set a buy limit here at that 886 level. So we have the low of the wick is right here at 892. So I'm going to try to go 30, 40 points below that low. Account for the volatility. So 892 would put us at 850. That's 40 points below that lowest wick, which would put the total stop loss at 113 points. Oof, a little bit deep. Little bit too deep. 110. All right. So if you're going to take this trade overnight, it's going to be a 1.26 to 1. That first take profit is going to be 18,100. And then as we go up, the next take profit is 18,220. So first take profit is 1.26 to 1. Second take profit is 2.3 to 1. And then the third TP, which is going to be the previous high. I wouldn't even target the previous high. I'd go for this area here, the previous 88.6. That'll put you at a 3.4 to 1 R&R. Jensen said I caught the bias at the 88.6 about 16 minutes ago, 15 minutes ago. Chris called it at the beginning of this call at 7:05. He's the one that said the 88.6 was going to hit in a bit at 7:05. Spot on. All right, so I'm going to put that buy limit here. Jen, I'm going to get a better entry than you, brother. I'm going to get that precision entry right here. Here's the deal. Take a look at just this 1.26 to 1. Just taking it to TP1. If I get a later entry right here, if I entered right now, just for the sake of catching this trade, and now I have a 0.67 R&R. Okay. If I take it all the way to that final target, it's a 2.26. Not bad, but you know, what's the chances it doesn't hit TP3? Versus if I wait for the re-entry, it goes from 2.26 to 3.4. That means if you're risking $1,000, that's the difference between making 2,260 or 3,400. Which one would you rather have if you're risking $1,000? It's easy. And so the question becomes, especially for a lot of the new guys who are listening to this, is your job to catch the trade, or is your job to try to find the best opportunities to maximize your chances of making money? Because I got caught in this trap too. I just want to catch the trade because it looks like a good trade, might not come back, but I know it's got a good chance of hitting profits. I'll be in it. Versus like that, and I'm going to try to wait for the best entry, because if I don't get the best entry, it's not going to suit my, my risk and reward. Jensen, I wasn't trying to make a dig at you. I'm just messing around. He said, had this fib drawn. Jensen, if you get a better entry than me and I caught the retest, I'm going to be sick. But I'm also going to be proud of you. So it's a win-win. Okay. Welcome back, everybody, or welcome if this is your first time. If this is your first time tuning in, how come you don't feel like it'll keep selling? Looks like a lot of bearish momentum at the. I'm just going to not even read the rest of it. You said, how come you don't feel like it's going to keep selling? I don't make investment or trading decisions based on feelings. I do feel like it could keep going. And that's the exact reason why I do technical analysis, because I had to zoom out and I gave you guys some very, very important reasons for why a buy makes sense. So the definition of a bullish trend is when the market is creating higher highs and higher lows. If we look at the start of this bullish run, here's a low, and higher low here. Here's a high, higher high, higher high. Now, am I predicting that the market is not going to do this? Like, no, none of us know what's going to happen next. That's why I have to rely on market structure and analysis, because by definition, the market is bullish. Okay. Now, if the market breaches both of these levels, then the trade is no longer valid. And so we would have to break 833. Does that mean I should set my stop loss further? Probably, but then I would need to set my stop loss 30, 40 points below this low. And now, it's turning into a swing trade. So instead, if I lose 1% or 0.5% or 0.25% on this first position, then I can re-enter. If it does this, for example, I can re-enter on the way back in. Okay. Any questions, comments, concerns? Obviously, there's more trades. We'll talk about those throughout the week. Bitcoin looks like it's getting ready for this pullback. I posted this earlier, I believe. All right. So we had this beautiful expansion, retest, push up. We're getting choppier in here. So momentum is starting to slow down. If you compare it to this bullish move, this bullish move, this bullish move, we're starting to create these equal highs here. And so there's a very good chance, because of the slowdown in volume, we start to see a correction in Bitcoin. Once we have this full correction, and I'm looking for an almost 90% correction. If you guys know what I mean, chart addicts, wink, wink, 90%, very close to the 90, right? Very close, couple fib points off from the 90, if you guys catch my drift. Speaking of which, the merch line is now available for pre-order. If you guys click the link in the description for the 88.6 merch now available. So I'm looking for that correction, and then we'll probably see a continuation if we're lucky, unless you guys are listening to this and you're worth over $10 million in Bitcoin. You want another correction so you can buy more. We all do. So ideally, we come back down, further from the 60s, further from the kind of the 63, 60 range. Ideally, we break down and maybe we come back down and settle around the 50 and consolidate for a while. Bitcoin halving is in April, if I'm not mistaken. So Bitcoin halving count clock, whatever. Got a nice hash.com. 40 days away. Oh, it's on 420. That's insane. Is Satoshi Nakamoto trolling us? Having on 420? What is going on? That's nuts. Okay, Ken said, if I'm not wrong, I had this set up, but the reason I'm not taking this trade is it's a Monday, it's Asia session. There's possibility of price going lower. Things move slowly in Asia, so I prefer to take setups that are close to New York. So Ken, this is what, so that's my take on Bitcoin. You can see it push back down. Here's my take about the session. So you're completely right about Asia session being slow and it could go lower, but here's what I'm expecting. So it could play around this range. Don't get me wrong, during Asia. It'll hit TP1 during London and then come back in for a deeper retest during New York. And then in New York is when we can catch the retest entry at a lower price. This 1.26 to 1R, it's sitting here waiting for you, right? You can enter in Asia. Don't expect the volume to hit until London. Yeah, and it's still Sunday in New York. So right now, that's why I'm expecting the pullback. I think it's a little bit premature for that move. It's my first time here, loving the analysis. Welcome, welcome, welcome. Good to have you here, DA. Damn, you really think that Bitcoin gonna do a big ass correction like that? Sheesh. Well, Jaquan, let me tell you this. If you are holding $100 million of Bitcoin, let's say you're one of the bigger players, you're holding $1 billion in Bitcoin. And if you bought it at 30, let's say you bought it at 27,000 and it's sitting at 70,000 right now. Okay, let me see how many times that is. 70 divided by 27 is 2.59. So you're up 2.59x on your money. All right, Jaquan, if you were sitting on $100 million and then now you're sitting on 259 million, you're not taking 50 mil off the table, right? You're not taking your original 100 million off the table and then letting the rest ride. You're telling me you're going to keep the whole 260 M's on the table? No, right? I wouldn't. Y'all get me? So it's like, now imagine somebody like Michael Saylor that was buying Bitcoin at 16,000. Imagine someone like Elon that was buying Bitcoin at 3,000, 10,000, 20,000. Y'all don't think they're going to take a couple billion off the table? Right now, I could be wrong because there's some massive institutions that are now entering the crypto space. We have BlackRock, JP Morgan, the largest banks getting into this whole ETF nonsense. So there is a reason that this could be the pump, but in my honest opinion, we've never had a situation during the Bitcoin halving where that's where the bull market started. Typically, even though supply gets cut in half and it's very hard for people to find Bitcoin, and that's supply and demand ensures that if there's too much demand chasing too few supply, that price goes up. The Bitcoin halving creates such structural problems for the miners, and it kicks out a lot of the miners, so it makes the network way too slow, and so people aren't using it. And then it also impacts really it just impacts the miners the most. So there's always a slowdown after the Bitcoin halving, and then typically the bull run starts probably 6 months after the halving. So I'm expecting November to really be that big liftoff, but I could be wrong about this. Maybe this is not going to be like the last 7 years or 8 years. Maybe this time is different. Scalped 7,200 on my futures account from this NAS setup already, and I'm out. Hey, yo. What size futures account, Jensen? Bro, how did you make 7,200 on two 15-minute candles, first off? 250K. God dang. Excuse my language. Dang. Let me do some quick math here. Bro, isn't that damn near like 1.5% or something? 10 contracts? Bro, ain't that like two? That's not 2%, is it? No, it's not. No, I'm clowning. No, that is 2%. That's 3%. All right, somebody do the math for me. How much is 7,200 on a 250K account? Thank God my dad's not watching this. I'd have got the call already. Okay, good stuff. Let's do gold US30, and then I'll do the dollar, and then we'll call it a day. Dollar's been on a nice bearish retracement, so this might be the shift that we're looking for the dollar to continue back up. We could see a correction on commodities, indices, and crypto, and then after a lot of this extra, what I call it, this extra liquidity kind of flushes itself out through the system, some of these overvalued stocks start to come back down, then we continue that bullish trend for commodities, equities, and crypto. 3% in two 15-minute candles on a Sunday. Damn, Jensen. Good stuff. I will. Gold absolutely crushed. Man, that 1995, that was probably the call of the year, wasn't it? Or the call of last year, I guess. It's one of those trades that'll have you thinking, damn, maybe I should start trading gold. Houston, Texas traders, CA is a joke. Okay. I mean, I feel that the shit just amazes me for real. I'd for sure take some money off. Exactly. You got to expect like the smartest investors in the world are rational actors, meaning they're going to do what's in their best interest. UJ coming back down. The 88.6 on both sides. Beautiful stuff. Let's take a look here. So UJ is very, very straightforward. If we break through, what is this? The 146.3 level. Okay, so this is kind of that break or bounce. Right now, we had a rejection last Friday. Right now, we're starting to fill that wick. If price continues to hold here this week, then we could see the continuation back up. If we break through this level, we'll either come back to retest here or come back to retest 90%, which is all the way back at 141. Obviously, whenever I'm looking at any dollar crosses, I'm always cross-referencing it with the DXY. And so the DXY kind of has a similar structure. You have 1, 2, 3, and then the reversal back in, or technically 4, and then the reversal back in. We have a break of that first zone up. If we break the second zone, price is going to come, or the DXY is going to come all the way back down to this 101 level. So really, the two levels I'm watching are going to be 101.9 and 101 flat. If we break through the 101.9 and come all the way back down to the second level, that's when I'll see a continuation back up. Same thing with USD JPY. Okay, so if we break through this zone, I'm going to look for a retest at this second level. And then really, I'm going to be looking for buys at 144.4 and 141.4. Try to say that one 5 times real fast. Okay, time to call it a night. That's basically all I got. Oh, I'm looking for a correction on USD or Euro USD 1.106. All right. If price gets caught up over here at the 1.1 psych level, where all this area of selling is, so every time the market gets here, you see rejections, see rejections, see rejections. If the market breaks through here, then I'll be looking for the shorts at 1.106. If the market rejects here, then I'll be looking for a pullback to the same zone. Okay, I want to see a rejection. I want to see it break above, and then I'll short on the closure back in. Okay. Any questions, comments, concerns? We talked about Bitcoin. We talked about gold. We did NAS. What did we not do? US30. So US30, I see more bearish potential than I do on Nasdaq, only because the majority of the S&P 500 stocks that are sort of shared between the US30 and the S&P 500 not doing too hot. So at least you kind of have some of the tech names holding up the Nasdaq. The Dow Jones, okay, there's a lot of earnings reports coming out in the next 2 weeks. We have Dollar Tree and some of the rest, so maybe the Dow Jones has a recovery, but same exact concept. You have these areas of structure that get built on the way up. Okay, if we get to this first area of structure at 38,200 and we hold that support, this is where we'll find that Fibonacci retracement level to enter. during the week, and then 37,250 would be that second zone. Am I eyeballing the 88.6? Yes. Could I eyeball an 88.6 from outer space? Probably. Do I need to take out the fib? Not until I'm ready to take the trade. I could, but I'm going to let you guys do some of that work for yourself and practice for the week. All right. Chart Addicts members, let me know if you have any questions in the chat. YouTube, thanks for stopping by. Drop a like if you enjoyed this or if you had a great session. Yeah, you should have left Houston, Texas Traders post up. Dude was a goofy. Ultimate Black Man Radio, hello. Red Life Gueche, okay. My man, what prop firm you been using that are solid? So I'm getting ready to start back prop firm trading this next coming 2 weeks. I'm giving Apex a try. Actually, matter of fact, I'm not going to shout these guys out. I didn't realize how many people were signing up for things because I'm mentioning it. I don't have a deal with these guys. And at this point, you know, if I'm going to recommend somebody, I'm going to try their platform first. I'll try the platform. I'll let you guys know exactly which one I'm going to test out, and I'll do it live on the streams. I think the first one up is going to be Apex, and then we'll do Top Step right after. Let me know which one you guys are rocking with. SS, you might have to change your name. SS, very sketchy. I like this fib retracement. Me and you both, brother. Something about that fib retracement could change your life. You said clear as day. I agree. All right, everybody, happy and safe trading. Quick reminders for the week. Number one, if you're interested in learning the NAS100 strategy, head on over to the link in the description. The NAS100 masterclass has been revamped and updated. If you guys have taken the masterclass before, if you're a VIP member, first off, if you're a VIP member, you get free access. If you've taken the masterclass before and you're not a VIP member, you get half off future masterclasses, so make sure to take advantage. And then if you are not already in the masterclass, you've not taken the class yet, this is the perfect first time. We're revamping it to include everything that's changed in prop firms, changing the strategy depending on the rules of the firm, trailing intraday trailing equity drawdowns versus balanced base drawdowns, hitting profit targets on a personal account versus. We'll talk about all those things and more in the revamped NAS100 masterclass. Link is in the description. Make sure to grab it. Also, make sure to grab your early bird tickets to the FX Summit 2024 conference in Dubai. Head to fxsummit2024.com. It's the #1 conference for traders, investors, and entrepreneurs in the world. All right, we have some great interviews launching on the YouTube channel as well. Make sure to check those out. Interviews with a lot of our students and successful traders. So if you want an inside look at what Chart Addicts is really like or what some folks' experience has been like from a first-hand perspective, make sure to click those videos and check them out to support the channel. Is there anything else that I forgot? Oh, yeah. Trading tips. Just one or two. Number one, set a plan early in the week. Okay, Sunday is the perfect time to do it. Take 20, 30 minutes to do exactly what I just did. Check the news events. Is there a holiday? Are there any red flags that I should watch out for? Then go on the charts. I only trade NAS100. I look for swing trading opportunities on FX, but mostly just trade NAS100. So I would encourage you to do the same for whatever pair you're trading. Find those one or two scenarios, ideally two, maybe three scenarios that could happen during the week that you could capitalize on. And then make sure that you plan, or make sure that you're trading your plan during the week. So planning your trades is one thing, trading your plan is the second. Obvious enough. Second, everyone struggles with psychology. Roy, psychology, my mindset, right? It's getting in the way of trading. No, you're getting in the way of trading. It's not your mind. You, okay? Make new choices this week. Get very clear about what actions have been holding you back by taking some time to reflect before you start the week. What has been holding me back from being the best trader I can be, up until now? What is still holding me back? What are some things I'm doing that are stopping me from being the best trader I can be? Got it. Over trading, spending too much time on the charts. When I tell myself I'm going to get off, I don't really have anything to do, so I stick around. I hate my job, so I'm kind of ducking my responsibilities at work to trade. What is it? And then fix it. Oh, I'm going to try to fix it. I'm going to try to be more disciplined. You don't try. You don't try to be more disciplined. You just do it. Right? Progress isn't something you try. Progress is something you do. Well, I'm going to try to lose weight. No, you don't try to lose weight. You're either losing weight or you're not. You're either doing the stuff to stop eating more, to exercise more, or you're not. Okay? So you're either going to follow your rules or you're not. I'm going to try to be disciplined. Do it. Okay? Happy and safe trading, everybody. Crush it. Drop a like if you enjoyed this stream. Peace. CA members, keep crushing it. We're going to have an incredible week.